There are 7 key areas that cause businesses to have poor cash flow. I'm going to run through all these 7 areas, and some may or may not relate to your business, but the majority of businesses will have either a portion of these 7 or the entire 7 that will be affecting their cash flow. The first area we're going to focus on is your accounts receivable process. So if your debtors are slow to pay and there's no incentive for them to pay early, or we give too generous terms, your cash flow could all be tied up in your accounts receivable, which makes it hard for you to stay on top of bills. And basically, by shortening your debtor days, you can help free up a significant amount of cash flow. The second area is your accounts payable. So on the flip side to receivables, if you pay your payables late all the time and you're not taking advantage of either volume or early payment discounts, one, you'll have potentially suppliers that aren't real happy with you, but also you'll be missing out on opportunities to save money via early payment discounts or settlement discounts or volume discounts. So by having a poor cash flow and paying late, it can severely impact your business. The third area is inventory management. Now, if you run too much inventory and your stock turn rate and your inventory is too slow, this will severely impact your cash flow. So by carrying too much or more than the optimal amount of inventory, we can help you manage what that inventory should look like and what the stock turn should look like and what the turnover day should look like, which will severely increase your profitability and your cash flow cycle within the business. The fourth area is having an incorrect capital structure. So if you're carrying too much debt because of some of the previous areas, then you could be paying a really high amount of interest for your business, which is going to be impacting your profitability. For example, if you're carrying too much inventory, then you've got a lot of money tied up in inventory. If that's then serviced with debt, then you're actually carrying too much inventory for your turnover. You're also paying interest, so there's a double whammy in your cash flow. So by getting both of those things right, getting the inventory right, getting your debtors days right, you can actually help eliminate a lot of debt by fixing a couple of those other problems. The fifth area is probably the one that people would focus on the most, and that is having too high overheads. So a lot of people will focus on cutting costs as their first point of call, when it really, in our mind, is about the fifth level of cash flow management. Having said that, it's an important point, and if you are overpaying for certain supplies and for certain costs in your business, it is definitely an area that you need to manage, and we can help you identify opportunities to reduce your overheads. The sixth is having a very low gross profit margin. So if you're relying on having a very high volume business with a low profit margin, or if you haven't increased your prices recently but all your costs have gone up, then that squeeze in your margin could be severely impacting your cash flow. So gross profit margin management and monitoring is a really important point in making sure that your cash flow is strong in your business. The seventh and final cause is not having sufficient sales for the level of overhead and the level of staffing that you have in the business. So just focusing on all the costs is one thing, but then focusing on ways to grow your revenue, to add more sales, to increase the turnover of the business is a really excellent way to also help improve your cash flow. And what we've found is if you focus on those 7 areas of your business and make small tweaks to improve them, your cash flow can improve dramatically. So a small tweak in each area, we can show you the difference it'll make to your business with live examples of your business, and we'll be able to work with you to improve those areas of your business and improve your cash flow, and as a net result, improve your profitability.